Hi, this is Mark with Ease Investing. Do the terms, put credit spread, put debit spread, call credit spread, call debit spread, buying a call, selling a call, buying a put, selling a put confuse you? If they do, by the end of this video, you'll understand each one of these in an easy way. The reason why these are important to understand is each one of these allows you to make money in the stock market in a different way. First, let's get into these and watch the video till the end so you have a clear understanding of each one of these. First, you will select the stock that you want to do one of these options on. For this, and to access these options, after you select the stock, you will click Trade and then Trade Options. Each one of these has an expiration date. We're going to use December 19th in this example. At the top of the screen, this allows you to select each one of these options. First, we're going to do buying a call. When you buy a call, you are paying money. In this example, for the $27 call, you're paying $3.30 per contract. One contract's 100 shares. So in this case, you're paying $330 to control 100 shares of the stock. You are betting that the stock price will increase when you buy a call. Remember, when you buy a call, you pay money to control 100 shares, and you are betting the stock price will increase. Next, let's get into selling a call. Now, when you sell a call, you have to first own 100 shares of the stock. When you own 100 shares of the stock, you can then sell a call on those shares. By selling a call, you are making a promise, in this case, that you will sell the stock if the stock price is above $27 at your expiration date. For making this promise, instead of paying money, you actually receive money. In this case, you would receive $320 for making this promise. The key difference between buying a call and selling a call is, for one, you pay money, and for the other, you receive money. Do you remember which one you pay money for and which one you receive money for? If you don't, rewind the video so you understand. Next, let's get into buying a put versus selling a put. When you buy a put, in this case for the $27, you are paying the $390 to control 100 shares of the stock. You are betting that the stock price will decrease. If you're correct and the stock price decreases, you make money. But remember, for this one, you pay money to control the 100 shares. Now, when you sell a put, you're making a promise that you will buy the stock, in this case for $27 a share, if the share price is below $27 a share at your expiration date. For making this promise, you would receive $380. Do you remember for which one you get paid money and which one you pay money for? If you don't, rewind the video so you understand that. Next, for a put credit spread, that simply means that you are selling a put you get paid money for, and then now you're going to go ahead and buy a put for which you're going to pay money for, but you are going to receive more money for the put that you sold. That's why it's called a put credit spread. For a put debit spread, this simply means that you're going to buy a put, but the price that you pay to buy the put is going to be more than the price that you receive for selling the put. That's why it's called a put debit spread. Next, let's get into a call credit spread versus a call debit spread. For a call credit spread, that simply means that you're going to sell a call and you're going to get paid money, and then you're going to go and turn around and buy a call and you're going to pay money for that call. But the money you received from selling the call is going to give you more money. That's why it's called a call credit spread. Now, a call debit spread simply means that you're going to buy a call, but you're going to spend more money buying the call than the money you'll receive from selling the call. That's why it's called a call debit spread. In this video, we have discussed buying a call, selling a put, buying a put, call credit spread, call debit spread, put credit spread, put debit spread in a simple, easy way. Please like and subscribe